Hey everybody, Dan Rawich here. Happy Monday afternoon. This is going to be your daily recap. We had a good day today. I'm going to quickly go through each of the trades, but first I'll share with you the overview. Um, I went 6-1. This is slow, and Lee went 4-0. So really, really solid day. And just to show you what that looks like in profits, you can see my 6 wins, 1 loss. I made $30 a contract, which is not a lot for 6 wins, but some days you just would rather scalp. And these small profits, the reason we're so successful is we catch the momentum and we don't try to take that much out of the move. And we're looking for these kinds of numbers because $30 per contract, 40 contracts, that's a $1,200 day. Lee trades 20 contracts. He made 31, so that was a $600 day. And we do this over and over and over. And I'm going to continue to show you these so you can see that. So this is every trade. I also want to show you overall the last 7-day run rate. It's getting pretty close to 90%. Today was definitely a 90% win rate. This is still showing yesterday because the market was closed. All right, so let's break down the trades real quickly. Here we go. They were all pretty clean. I had one oops that I got away with. That's all I can say. I got away with. Sorry, losing my voice. Okay, so the first entry for me, now I come in at around 8 and Lee trades from 6:30 to 8. So the first trade I entered at 8:22, and you can see we had the sell signal up here, and gosh darn it. Of course, I don't have my drink. So when we see a sell signal, then we're waiting for a break, and it kind of got stuck here, and then it broke on this candle. More importantly, I was looking for this drop and chop. That's about as close to a sure thing as you're going to get. So we entered perfectly on the chop drop. Got out a little early, but still it was a pretty profitable trade. We wrote it down. Again, we bought puts, so we make money when the market drops. Then I got back in. I got back in because the chop dropped again, and it looked like the fall still had momentum. But I got in and out very quick. Same bar, less than 30 seconds in this trade. You could just tell it was getting to be kind of peaky. Sometimes when the price just shoots down like that and then it pulls back up just as fast, you know that might be the bottom. And we rather not sit around and think about it. Then we got a long trade. We bought calls here at 846. Yep, 846. And again, just a small drop and chop. We already had the buy signal here, and we were just waiting to clear the nearest wick, which was the bull signal itself. So we got in here as we cleared that wick, got the drop and chop. Actually, sorry, we got in here right when we cleared the line. And then we got out pretty fast. Wasn't a huge trade, but it was a profitable trade. And then the next one was really like just so textbook. We got the bear signal. We got to wait and clear these wicks. If there's no wicks, we rather have a dot, but when there's no dot, we take the wicks. And you can see that it broke through right on this candle. And look where the chop dropped. I could have gotten in one candle earlier. And then I wrote it right to the bottom almost perfectly on that exit. So that was good, easy. Okay, the next one is, there's a story here, but I'm not going to get too much into it. I'll just say that I was majorly distracted in this as it backed up here, and I left my computer, and I came back, and I saw this, and it was really upside down. Unfortunately, the order blocks are gone now, but there were giant sell blocks all through here. And so I opted to let it ride up to here. Now I buy options further out just in case I ever do decide to do this. It's not something I like to do. And I would say, had I not been distracted and been at my computer, I would have closed this trade right here for a baby loss. Because you can see the system gave you the exit. Instead, came back, it was up here somewhere, and just like clockwork, it hit exactly where this red sell band was. I wish it were still here. And it just fell really hard, and I jumped out. So I ended up getting in. Remember, I bought puts here. was kind of upside down and ended up with a pretty good profit right here. We call that, what do we call that again? Riding the Toad, Mr. Toad's Wild Ride. Not recommended, but it worked out. Then we came into here. We took this bear signal here. It wasn't the best signal, but it certainly worked out. And I'm trying to remember. Here's the red band. So this red band went all the way across the page. So when we came out of this red band, and chop was already kind of low, I'm getting this backwards. We went long here. We bought a call here, and we bought it because chop had come down. The bull signal was up here. We had to clear these dots, this line here, which we did. And then we got out on the next candle. This was a small loss. It wasn't super small, actually. I think we lost like 10 cents or $10 a contract here because I went long and it pulled back, and I did not want to ignore that exit, so I got out on that exit. You can see it wasn't a lot. The system gets you out pretty fast. So we got in here, got out here, took a small loss, and then we turned right around and we got it back, and then some, a lot of it. So then we got a bear signal here, and again, there's no dots today very often, so we have to clear these wicks here. You can see that. You can see that I was very patient. I waited for it to clear the wick, and then the chop dropped, and we took this thing down for a really good win. This win, as you can see, was way bigger than this loss. So sometimes you avenge yourself and you get lucky. So that's what that looks like today. I'm not going to go through Lee's trades. I will say that the market's been incredibly choppy. I'm going to do a little bit of a market update here for you guys. It's been so unbelievably directionless. You can just see going back. I mean, okay, it broke up here a little bit, and it broke up here a little bit, but for the most part, it has been completely sideways since, is that October? May of 22. So virtually a year, other than a short trip out of here, but then back in. This is a really tough market to be long in, and we're getting very close to 4150. 4150 is probably the most dangerous level I've seen in a lot of years. The viciousness of the selling when you get up into this block here. That's why it's red. It's a sell block. And this is the same block that went across here. Here, it caused a major fall. And then it held here. It goes, this block becomes problems. So until we can break above 4150 on the S&P, I would expect this market to stay incredibly choppy. And that's why we're trying to really kind of staying out of the swing trade market. We do take swing trades, but they're a little bit different. In fact, I might talk about those tomorrow. Real quick, I want to show you two other tools that we use quite a bit to kind of gauge market direction. Let's see. So this one, done by a gentleman named Stephen Swanson, and I would have to tell you that he's brilliant, and he's developed a method of reading the market that I've never seen before. I've been a member of his for years, and this is one of those things I'll always continue to pay for. So he does a pretty good job with the commentary, and then he ranks what he calls the 3 T's. The trend is neutral, the timing, and these are time cycles. The whole thing that he does is based on time cycles. There's nothing else like it. And so what we watch is this magenta line. It usually is the most important line. And when you get into really a lot of trouble is when the magenta line is going down and the white line. So the magenta line is the mid-term market. The white line is the long-term market. And when these two clash, you get this incredible chop that we're seeing over and over. Now you can see that the magenta line is turning back up and the white line is going up. So this might be a positive run, but you have to be careful because we're up in this upper zone. It can't go past 100. So when it gets up here, it turns down. The question is, how far does it turn down? And this has usually been a lot more reliable than it has been. It's been very tough to read because, again, magenta line goes down, white line goes up, they clash, and you end up with like, a nothing burger. Then also, uh, one of my favorite market gauges. You're gonna make me log in? Yeah, let's see. This is a feed to the big money. I'm talking about some of the largest funds in the country, and this measures their buying and selling activity. And the big money index is really money. For instance, when it gets down in this oversold category, it runs. And you can see the blue shaded area, that's the market. The yellow is the big money index. And again, what's been very unique here is the amount of chop on the way up and down. So normally we trade this just so smoothly and so easily. So when the time cycles that I showed you a minute ago are bullish and the magenta line's going up and the white line's going up, and we see big money coming in, well, there's nothing to stop me. There's nothing will stop me from going in the market at that point. But you can see now it's just been a jagged line. It can't make its decision. Then we come down here. This gives you the total picture. And you can see this big money was on the sidelines for a long time. They were smart. You can see how choppy it was. They were not ready to make a commitment. And now you can see that they have committed. Today was better than Friday, but these days with all that selling, there's no way I'm going to be in the market. It's just too choppy. And when we get around the 4150 level on the S&P, we're really going to watch that. The third thing I watch, but the video is getting kind of long, are options activity. I watch options all day long. The options flow can teach you a lot, but you have to understand how to read it. And that's something we, help our members with. So that's it. Sorry, this is so long. I hope you found it helpful. Thanks and have a great day.